We will be analyzing the cash flow statement for Lowe's Companies Inc. Cash flows from the operations supplemented by short-term and long-term borrowings are essential factors that allows continued operations of the company as well as enables the company to return excess funds to shareholders in the form of dividend payments. According to the MD&A from the company's Form 10-K, as of January 28, 2022, the company held $1.1 billion of cash and cash equivalent as well as $4 billion in undrawn capacity from its revolving credit facilities. First, let's go over the operating cash flows from the company. Cash flows from operating activities is the primary source of liquidity for the company. The net cash produced by operating activities showed a decrease from fiscal year 2020 and 2021. This is primarily due to the changes in the company's working capitals as well as new initiatives being implemented to improve the customer experience in conducting business with the company, which are partially offset by an increase in net earnings. As we can see on this section of the consolidated statements of cash flows, we can see that from the operating activities, net earnings for fiscal year 2021 has increased by 2.6 billion from fiscal year 2020. So two major sources of cash from the operating activities are from the depreciation and amortization and non-cash lease expense. As we can see, this has the highest cash inflow amounts from this section. These are shown as positive values on the cash flow statement, increasing the net cash provided by the operating activities. As we can see from the photo above, two major uses of cash in operating activities comes from the purchase of inventory and expense paid towards operating liabilities. Accounts payable have also increased by 466 million in the fiscal year 2021 as compared to a rise of 3.2 billion in the fiscal year 2020, which resulted in a 2.7 billion decline in operating cash flows, compared to a drop of $3 billion in fiscal year 2020. The inventory has also lowered the operating cash flow by about 1.4 billion in the fiscal year 2021. Other operational liabilities have decreased for the current fiscal year as compared to last year as well, principally due to the timing of the tax payments and accrued discretionary compensation for hourly employees connected to COVID in the prior year. This is according to the MD&A of the company as stated in its Form 10-K. Let's now move over to the investing cash flows, which are from our investing activities. So from here, the net cash used in investing activities primarily consists of the transactions related to capital expenditures. The company's capital expenditures typically consist of investments in its strategic efforts to improve current locations, support store development ambitions, and increase the company's capacity to service customers. In 2021 and 2020, capital expenses were 1.9 billion and 1.8 billion respectively. As we can see from the section of the cash flow statement above, the two sources of cash from investing activities are from the proceeds from sale or maturity of investments and the proceeds from sale of property and other long-term assets. We can see this as the positive amounts on the cash flow statement. And the two major uses of cash in investing activities are towards purchases of investments and the capital expenditures, which are shown as a negative amount on the cash flow statement. Let us now go over the financing cash flows. For share repurchases, cash dividend payments, and debt-related transactions make up the majority of the net cash required for the financing activities. So this section of the cash flow activities appears to have the greatest cash outflow in the company and decreases the end of year cash and cash equivalent values. We can see this in this section of the cash flow statement. For financing activities, the net cash used for this totals to $12 billion, and that is like the highest among the three sections. Two sources of cash from the financing activities are net proceeds from issuance of debt and proceeds from issuance of common stock under share-based payment plans. And the two major cash outflow were from the repurchases of common stock and the repayment of debt. The company has an ongoing share repurchase program and has paid about $13 billion in the repurchase of these stocks. Let's go over the differences between net income and operating cash flow. So the bottom line of a company's income statement is the profit or the net income, due to the fact that the transactions for this are completed whether or not cash was received. This income and expenses are being reported. Net income does not include the non-cash items. That is the main difference between the two. The operating cash flow is computed using the net income to begin with and adds the non-cash items that could either increase or decrease the initial amount from the net income. Reconciling the amounts from these non-cash items is important in determining the net cash provided by the operating activities and give the actual cash value that the company has available for use. So after reviewing the company's cash flow statements, let's go over what its financial strengths are. The company's cash flow statement shows that the net cash provided by its operating activities is still the primary source of its liquidity. From the company's MD&A section of the Form 10-K, it was explained that the decrease in the net cash provided was mainly due to the implications of the COVID-19 pandemic. So this is important to note due to the decrease shown between the fiscal year 2020 and fiscal year 2021. Proceeds from the sale and maturity investments as well as net proceeds from the issuance of debt has the higher amount of cash inflow compared to other line items. So we can see this is from the second section, like investing activities. We can see that the investing activities are able to bring in some cash to the company as well as they mature. The company continues to be competitive as well in regards to the sale of its inventories. So the company does show a negative amount on the inventory part of its operating activities, but a negative amount shows that the company is continuing to purchase inventories. This is due to the demand as well of the customers. So we can see that as they purchase inventories, it is also being purchased either by credit by its customers. Now that we've gone over some of the strengths that we can see from the company's cash flow statement, let's look at the financial weaknesses that it implies. So the majority of the company's cash outflow was towards repurchasing of its stocks and the payment of dividends to its shareholders. We saw that from the repurchasing of stocks alone, the company has paid out about $13 billion. So the cash flow from financing activities has the highest amount of cash outflow, which is at $12 billion which offsets the cash provided by the operating activities since that is a higher number, leading to a decrease in the cash and cash equivalent at the end of year for 2021. The increase of debt as compared to the cash provided by the company's operating activities, if not remedied, I believe will continue to affect the cash flow negatively.